election. What does that mean for tax purposes?
Treated like a partnership.
That's right. And partnerships and S-corps are what are called pass-through or flow-through entities. Pass-through or flow-through entities. They file tax returns, but the returns are strictly informational. Who pays the tax?
Individual.
The partners or the shareholders, that's right. And through their K-1 schedules. So the thing that appears on a multiple choice question is, it talks about what year end, and this will be on one of the projects later, what year end must an S corporation adopt? And the answer is the calendar year. An S corporation must use the calendar year. C corporations like the DeVry Education Group are, you can use June 30th, you can use September 30th, you can use a fiscal year. So just skim that chapter again. For this first week, I'm going to summarize 1 and 2, look more over chapter 3, and ebook should be fine. Next week, I'm going to have stuff on the board again. I'm going to put my U.S. versus Davis diagram. I'm going to put stuff up there relating to alimony recapture, a lot about rental income and improvements, because we're going through all the aspects of gross income and items that are excludable from taxable gross income. And this would be for all types of entities. Bill, what's excludable? Some things are more obvious. Life insurance proceeds received by reason of the death of the insured. But amounts received under an annuity, there's a partial exclusion. So we'll be looking at a lot of areas there, including some fascinating areas. Like what happens if you have meals and lodging that are provided to you without charge by your employer? That'd be tremendous. A 2-bedroom apartment in Manhattan goes for over $6,000 a month. That'd be nice to have a 2-bedroom apartment paid for by the employer, and that would be part of your accepting of the employment. So we'll be going through that aspect next week. Chapter 6 and 7 in week 3, these are primarily, 7 deals with the passive loss rules, and I've got that extra handout that I'll supplement my discussion with. But the business deductions, these are the deductions that a corporation would have, and if you're an individual and you have a proprietorship, what schedule of the 1040 do you file for a proprietorship? Which schedule? C, yes. Schedule C, the unincorporated business or proprietorship. One of the weeks in the online discussion,
Did you get this one?
No.
we're going to go over that, where we'll talk about what entity form might I want to place a corporation in for either tax or legal ramifications. In week 4, in the classroom, open book and notes, but I don't think you need the book. With time restrictions, we got to get you in training for the CPA exam. We're going to have one of Bill's exams. It's going to actually be on paper. Enjoy it. I don't give any other paper exams in any other course, and I teach like 10 courses. And we'll go through the topics in week 3, so you know the subject matter. That first exam will have computational multiple choice, where you have to show the computation, not guessing for the answer. If it's non-computational, you can guess. And then there'll be some matching. What is matching? We'll talk about that in week 3. And that will basically deal with the material content to that point. Then afterwards, the itemized deductions. So many things are happening now in the tax field. This is just unbelievable, guys. It really is. 20 years ago, maybe 15 years ago, if you came to me and said, Bill, do you think they'll ever restrict the mortgage interest deduction or charitable contributions? And I'd say, are you crazy? Those are sacred cows. But now there's a lot of proposals to either eliminate the mortgage interest deduction or to severely restrict it. Now it's restricted now to some degree, but that degree only affects us. Real wealthy people don't have mortgages. How do they buy a house? Cash. Remember Mitt Romney had 10 homes. He was upset at one of his California houses, he paid $6 million, it was only worth 3. But he paid cash for it. I got no sympathy, sorry. So restricting the mortgage interest deduction. Remember President Obama had a proposal, of course I was in favor of it, that would restrict the benefit of charitable contributions deduction to 28%. Because remember, what's the maximum income tax rate right now?
39.5.
39.6. Remember, that was part of the Atcher legislation. Under George W. it was 35, under Reagan it was 28. But, and we'll be doing tax history on some of the posting. I love tax history. And basically, he wanted to make it so that if you were really wealthy in an upper tax bracket, the maximum benefit that you could get out of a charitable contribution deduction would be 28%, even if you were in the 39.6% bracket. Thank you. Something that will kill me, and I know this is going to happen, regardless of who is in Congress or wins the presidency. Want that. We want bedroom community. So real estate taxes are exorbitant. The bill came the other day and I paid the first installment. Since it's in a checking account, that gives me a penny interest per month. I get a benefit now. I'm probably around 28% bracket. I work for the school, so my income is lower. And I figure, well, I'm really only out of pocket 72 cents on a dollar because I itemize and I can deduct my real estate taxes. State and local tax deductions are going to go. There's no question about it. What state and local taxes do we get now other than real estate tax? What can we deduct? Yes, it's state income or sales tax. Many years ago, it was state income and sales tax. Then they eliminated sales tax in the '86 Act. But then some states objected. Anyone know what the states were that objected, that they weren't allowed to deduct sales tax? Come on. Washington, Texas, Florida, South Dakota. What's true of those states?
They don't pay state tax.
They don't pay state income tax. So they said, we're getting shafted because we rely more on sales tax and our residents can't deduct those, but people like in New York where there's city income tax and state income tax, they can deduct their taxes. Well, I guess that's why we have the election, which was effective through the end of 2014, but remember, those are extenders that have to be reinstated. What's going to happen is after 2016, I don't think until then, there'll be no inequity. There'll be no deduction for state and local taxes. I can still remember when you got to deduct the state gas tax. And that's been going for a long time. So those are likely to go. So there's so many changes. That's why I had a lot of you, I put that topic in here, tax proposals of Ted Cruz and Marco Rubio. I haven't seen much about Hillary, but maybe someone can find something about her proposals, because everyone's getting proposals in, and somebody researched Dave Camp. Dave Camp came up with a very comprehensive tax program of several years ago. He was head of the chair of House Ways and Means. And although I didn't like all of it, I thought it was trying to be nonpartisan. But because it was nonpartisan and didn't favor enough of his constituents, the Republicans, it kind of stayed on the shelf. I think he may have originally come up with the proposal back when George W. was still president. So some of you have looked at that already, and there's going to be major changes. The last major changes were in 1986. We've had a lot of tax bills since then, certainly under George W., reducing tax rates and so forth. But before that, it was 1954.